Morning, 8:30 a.m. Eastern Standard Time. I'm XRP Future Millionaire, and I reside in the great state of Michigan. I want to thank everybody for tuning in, but we've got to discuss a few things, including the revised CPI. So everybody always asks me what the Consumer Price Index is, so eat your heart out. Here's exactly what it is. It's about a minute and a half little diagram here, so pay attention.
The Consumer Price Index, or CPI, is considered the benchmark inflation guide for the U.S. economy. It uses a basket of goods approach that aims to compare a consistent base of products from year to year, focusing on products that are bought and used by consumers daily. The price of your milk, eggs, toothpaste, and haircut are all captured in the CPI. The CPI is calculated by taking price changes for each item in the preset basket of goods and averaging them, with the goods being weighted according to their importance. The index uses a base year for comparability of its calculations, so changes will often be provided on a percentage basis to reflect only changes to prior index levels. There are two CPI figures, the CPI for urban wage earners and clerical workers, the CPI-W, and the CPI for all urban consumers, the CPI-U. The most watched metric is the CPI-U, which is often presented with a seasonal adjustment, as consumer patterns vary depending on the time of year. The CPI is a detailed release with breakouts for most major consumer groups and geographical regions. The CPI is also used to identify periods of inflation or deflation. Large rises in CPI during a short stretch typically signal periods of inflation, and large drops in CPI during a short period usually mark periods of deflation. As well, the CPI is used to make changes to cash flow mechanisms such as pensions, Medicare, and cost of living adjustments. This versatility means the CPI affects nearly every market and person in America.
So here's the news, guys. In the Eurozone, we already know the CPI at home. It's been readjusted. It looks like we're looking at a recession because we're going to go back-to-back months with these numbers. So, but ours we have to wait. So, Eurozone June preliminary CPI plus 8.6% versus 8.4% year-to-year expected. So it's up 0.2% higher. Prior 8.1%. Core CPI plus 3.7% versus 3.9% year-to-year expected. Prior plus 3.8%. The headline reading reaffirms another record inflation reading in the euro area, which may lay down the case for bigger rate hikes by the ECB. That said, with 75 basis points already priced in for July and September, I don't think policymakers will stray away from that. The only positive is that core inflation was seen easing to 3.7 from 3.8% in May. So that's what we're looking at here. I wanted you guys to see that. So CPI is at 8.6% for June. It's a preliminary when it was expected 8.4% in the Eurozone. Welcome back, everybody. 8:36 a.m. So as you can see, the U.S. dollar currency index is over 105 spot. Man, it's coming up here now. 105 spot 32. Highest levels in many, many years. It's come back finally. Let's see. I mean, we hit these levels before, but before we hit this run up, we actually would have had to go way back because we hit levels not hit since January of 2017, where we're at right now. Besides this minor kick up, and now we're doing the small retracement and pushback, we're now on top of levels we haven't hit since 2017. So that's 5 years we've gone without the U.S. dollar currency index being as high as it's in this current push up. So that's devastating for crypto. Last night, crypto had some weird fanatic-y crap going on. As you can see, the U.S. total crypto market cap, and this was way back here. It's not even showing what it showed last night, but last night we had a glitch where it came down, if you look at my update, to 443 billion. It showed that the total crypto market cap was down 43.5%. We assumed it was a glitch, but it could be hinting at something greater. We came back up here, but we've never actually back tested the 1.057. But now that we've done all this, it kind of looks like a continuation pattern here, and for the total crypto market cap, which shows everything else in crypto, the direction, I mean, I wouldn't be getting too thrilled about going long here. That's your bear flag. So you could look at that, but then you can also say, well, we failed on the first attempt up, so couldn't we just say we're in a defined pattern? Absolutely. So you could be more like this, and then once that busts, you're coming down to 658.036 trillion on this breakdown. If you get a proper breakdown and this doesn't move up anymore and we've already capped, we could say we're coming from there and we'll take the peak and we'll come down to about 557 trillion. I mean, this could be a big drop if we fail this. Obviously, if we break back up, we could have a retest back up to the one, exactly where we're talking about. We'd break this and then we could come up here to like 1.2. I just don't know if this is possible, guys. This just feels like, or we could say our breakdown's going to happen here and it gets us closer to our 658. So those are the two targets on the total crypto market cap on a breakdown. Bitcoin 19,250. It's making either a bearish W reversal here, or it's going to continue breaking down. Our technical target on a breakdown, we were saying it could happen at 23,200. It actually happened at 23,072, or actually a little bit higher. So I'm going to take this out so we don't confuse anybody. But I have the EMA ribbons on because when you're below the EMA ribbons, you're very bearish. You're very bearish. You're below the support, which means the bears are starting to take control. In the 30-minute, we had a quick spike out, and then we just quickly fell back through. I actually shorted from somewhere up here, and I made two separate trades last night. I don't really want to get into it, but one was like 16 point something percent, and the other one was just over 11% on Doge. I ended up doing the second one. Very tricky market, though. I mean, we came up and back tested here just like we figured we would. Now we're probably going to test the EMA ribbons, and if we fail these in the 30-minute, we're just going to come down even farther. These all look like these Adam and Eve patterns. So once this, even in the short time frame, they look like it now. Like they've recreated the pattern. So it's basically once you break that uptrend, then you know your next target's around 17,982, and then XRP, because I got to go. Got shit going on this morning. I just wanted to give you a nice update. With XRP, look to come up to 32,317 if you can break these EMA ribbons, but if not, you're coming up to 31.7 and you're going to be rejected. We're in this inside out wedge now, as you can very definitely see. We came down here, now we're bouncing around. If we can break the EMA lines, you can either come up here or even up to 33.1 to retest. If you don't break these EMA ribbons, you're very bearish and you're going to be short all day. We'll be going short all day if these EMA ribbons hold. We've got the slight uptrend that once you break, you might as well just kiss your ass goodbye. XRP Future Millionaire, hit that motherfucking like button. We've been lacking on the likes. Try to join Tom's Army if you can, if you appreciate me. We're approaching sub 30 cents again, but we've had fire in here. So if you guys were in here, I mean, we are talking up a storm, talking. We've got some people sharing their stuff. We've got charts. We've got, what is this? Some people sharing their ups. Some people had some good nights last night. But this is what we like to do in here. We like to share our stuff. And it's a real powerful place to be. XRP Future Millionaire. I appreciate each and every one of you. Hashtag be better, do better. Hashtag FUD Assassins. And remember, help one person out each and every day. Because if I don't do my part and you don't do your part, what the hell's the point? Hashtag be better, do better. Hashtag be better, do better. Stay blessed, everybody. And stay true to yourself.